Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 22nd of October, 2018, and a strong day for the U.S. dollar. This is where you're going to see the settlement prices in the stock indices. We're just getting back to 3:30 p.m. Central Daylight Time, so they'll trade another half hour. But these are the last prices. Remember, they stopped trading the stock indices from 3:15 to 3:30. Then they reopened them. They go until 4 o'clock, they close, and they reopen at 5. But what's going on in the metals? Well, I think it's the strength of the dollar. I think it's the need for consolidation. I don't think the markets are in downtrends. I think the gold and silver are trying uptrends. I think copper's trying to figure out what to do. And the palladium market gained dramatically on the platinum today. As we come to the weekly chart, you can see you're down $4.30 starting the week off. By the way, prices are over that 18-week average of closes, so I'll call the bias up. Sideways action, I think you'd agree with that. Is this a bullish flag? It is a flag, so that's one of the formations that you've got there. And by the way, you'd activate this again to the upside by breaking out of it through up here. And if that occurred, it's up and away the market might go. I can't tell you that because it's a flag it's going to go there. I wouldn't do that. But you can see the formation, and I think you'd agree that's a flag pole and the market in the breeze right there. What else do we see here? We see a pattern that's had higher highs, higher lows. All of a sudden you backed off from that. You've got the higher high and a lower higher high. But the legacy of the trade still goes with the higher highs, higher lows. Those were the original patterns. This is a warning sign. Breakthrough 1221.70, and what could happen is the market breaks out of this pattern to the downside. That would not be pretty for those that are bullish the market. I say bullish because they have an upside bias. Let me explain that. Use the red line as a line in the sand. That's what I do. I filter many of my technical indicators by making a decision. If the market is over that, I say the market has a bullish bias. If the market's under that 18-day average, a bearish bias. If the market is over and a break ensues, I look for prices to go back down to the 18-day average as one of the supports, especially if there's no major moving average like a 100-day in front of it, to regroup. If the market's under it, I look for it to come back up and regroup there. Do we understand that? It's basic rule of thumb. That does not mean every case is going to be identical, but if you do your homework, you'll see you get down here and you make rallies towards these numbers. Do they always come up to them? No. It's not what I just said. What I said is if they get to them, they're normally a resistance point. When we come over to Bollinger Bands, the market was running the Bollinger Band for over a week. It left it, backed off, and as it backed off, you've just stayed in an overbought condition. Now, that condition is interesting. Both numbers today are over 80 on the slow stochastic. Both numbers on Friday were over 80 on the slow stochastic. Not so on Thursday. If you get 3 days in a row, I say the market is embedded. Embedded means you've converted from being overbought to locking in a bull trend until that red line closes over 80. So tomorrow, to me, is a really important day. I will look if the market rallies for resistance at 1234.50, but that's $9 higher from here, and that will keep the slow stochastic up, especially if you close anywhere near there. So I think tomorrow's a real important day in gold. In the GLD ETF, what the market's done here is pretty similar. You can see both numbers right now are, what, over 80. If we come to Friday, they were both over 80, not Thursday. You normally don't embed. So the odds favor the market won't embed tomorrow. But if it does, That puts into play the 100-day average, and if you can get over this number, that could put in play the upper Bollinger Band. As of right now, the GLD is not trending. You have lower highs, lower lows, countered by the bias of the market being up because you're over the 18-day average, and resistance is that 100-day average of closes. When we come over to the GDX, which are the gold miners, again, similar to the GLD, lower highs, lower lows, but let's take a look at these stochastics. Both numbers, all I got to do is look right here. Both numbers are not over 80 today. Forget it. This is already closed. You can't be embedded. So you have an overbought market that acts like it wants to do some pulling back in this market, and if it does so, the 100-day average becomes a potential support, while resistance is between the 100-day average at 2034 to the upper Bollinger Band 2054. So let's call the 100-day average down to the 18. I hope that's what I said, not 100. The red's the 18. Could be the range. The gold-silver ratio is telling us nothing. It has gotten quiet as can be. It did that up here as well. And when that pattern, by the way, this pattern's not quite as tight as that one was, it broke down. We'll see if that's going to happen. In the silver market, got to take a look at this one. We have the pattern of higher lows and certainly higher highs there. But with today's action, I suddenly have lower highs. So I have a market that's got resistance dropping, support coming up, and you're forming a wedge, if you will. We'll see what the market breaks out and what it's trying to do. Momentum is telling us nothing as it's going sideways. The copper market in the past 48 hours or so, actually a little more than that, 72, tried to break out to the downside, and that was last Thursday. Went to the lower Bollinger Band. One of the things I've been explaining to you is when you have the sideways action, you always got to pay attention. Will you get the follow through or not? In this case, you didn't get it. You immediately popped back. So again, I'll stick with what I teach. The first challenge of Bollinger Bands, be it to the upside or downside, are where, in this case, where the shorts, I think, did covering. If it was up here, it's where the longs, I think, came out, the first challenge. There's other rules that kick in after that. Today you got up to the upper Bollinger Band, and boy, that didn't last that long. If they had their orders in, they got out perfect, anyone that was on the long side, and the market came back and settled right back into what number? Remember what we were talking, that 18-day average, that line in the sand. Now here's where a spread went bananas. Lower highs, lower lows, outside day down. This chart threw out new sell signals. Why? Because of that. I'd say that the pros will look at the resistance of 831.70 to 836.90 as their resistance area on rallies. I would think that if the market takes out today's highs, you capture a whole group of people that went short on this. If that doesn't occur, I think they're looking for prices to work lower, and that's because momentum is fresh and breaking down. You have the opposite side happening in the palladium. You broke out over the upper Bollinger Band. Admittedly, you're overbought, nowhere near embedding. I'll stick with what I teach. I think the first rally is where pros take money off the table of the upper Bollinger Band. This market, what's the difference? I want you to look. You rarely hit the lower band. This one too. So it's interesting. The market's got a propensity to get up to the upper band. So these markets are trying to be more bullish than bearish is one way to look at it. And that's in the face of the strong dollar with an outside day up today into an overbought condition. I will look at 95.84 as the resistance, the upper Bollinger Band. You take a look here, 95.84 is the high. I mean, it's funny because other people are looking at the same thing, and I like when that occurs because it gives me an idea what they're doing. Now, I'm going to be holding my live webinar, and the webinar's this Thursday. It's by invitation only, and yes, there's a password. When you sign up, you will be sent your registration. Go to the bottom of that page. The password is there. Do we understand that? It's there. I've checked it. The first email that went out this morning, I don't know what happened. It didn't get the sign-up page right. The other one, it says corrected, is on it. If you didn't get the emails, it means you're not in my mailing list. The only way you're going to get one now, call my staff, Ask them to send you the email so that you can sign up for this. It's free. It's Thursday from 1 o'clock to 1:45. Bring your questions. We'll try to answer what you can. If it's a stock symbol, an ETF, bring the symbols for me. I'm not an expert on all those symbols. I know most of the commodity ones pretty well. But stocks, there's so many thousands. How am I going to know them? All you need to do is bring it with you. We throw it in and we'll try to answer any questions you might have, throwing our different studies on it. And I'll bring up a new study, I think, this week, something I haven't shown before. I'm Ira Epstein. You have a good day. I hope to hear from you.